Alrighty, you guys. No long intro this time. We gotta get a move on with this stream. We gotta hop right on into things. The feed has moved. Oh man. Everyone's talking about yen. Yen, 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 yen. We moved 450 pips in, let's see here. From high to low, this was 1 hour. So in the span of 1 hour, we had this huge 450 pip move. Absolutely insane move. Everyone thinks that this is the Ministry of Finance stepping in. Maybe it's the BOJ, but it's more likely the Ministry of Finance. And if you're just hopping in and wondering what's going on, go ahead and let me know in the chat that you're here. Legit 80% of my timeline here on X is just everyone talking about the BOJ. Yeah, Japanese yen. This guy is an economist. So I'm gonna get right to the point here, right at the beginning of the stream. What's the deal with all this? Why is this such a big deal? Well, I just did my month ahead and my week ahead streams, and in it I didn't set any expectations for the end. I'm like, dude, this thing can go to 170 for all I care, like the one guy on Bloomberg said. But there was a particular risk that every single outlook from every single institution that does any sort of FX research or macroeconomic research pointed out, is that if the yen appreciates very quickly and they have some sort of intervention in the yen, whether that's Ministry of Finance or Bank of Japan, what you'll end up with is this sort of move. But remember, the last time they did this, the intervention over here, look at this thing. It was about 180 pips, close to 200, and the thing immediately reversed. And then we went soaring, absolutely soaring. And then there was this dump here. You don't see that outside of Bitcoin. This looks like a BART pattern, doesn't it? An inverse BART. So the big problem with this thing potentially reversing is that if this is Ministry of Finance, Bank of Japan intervention, and we reverse off this, it's gonna make the Bank of Japan and Ministry of Finance really, really freaking hawkish. They want to keep the yen down, and if this was their intervention, which pretty much every single person on this timeline is talking about. And if we go to trading economics, you can see all the news here. However, the BOJ dropped wording on buying the same amount of bonds. Yeah. Dude, this is nutty here. Let's go to the news section. New Zealand jumps, yen jumps. Again, we went to 160 here. The exact high was 160.233. We can go ahead and line that up. Here on the chart. And real quick, let's look at financial juice. Load up the story. Yen makes a great comeback. Asia stocks climb. After falling to the lowest level in 34 years, the yen swiftly recovers. That's this drop here, igniting rumors that the government may have stepped in as Asian markets grind. For the first time, yeah, so this is just a review. Bond yields in Australia and New Zealand declined. Oh man, we gotta check out the other yen pairs. Yeah, it looks exactly the same as dollar. And then New Zealand, JPY. Yeah, looks also exactly the same. Holy smokes, you guys. Holy smokes. Again, what it would really be a big problem here for Japan is if this actually is intervention and it fails. It fails to keep the price down below this like 158 level. That would be really bad to have failed intervention. Now, we could reverse this by the end of a day or two, depending on the market outlook, because the market outlook is still really bullish on the US dollar. Incredibly bullish on the US dollar. In fact, there was some comments here on X that were essentially people saying, hey, even though we had this move, I'm going to still stay net long. Yeah, look at this guy. Watching it by the tick, and you can look at this thing. Oh. Yeah, man. Something going on in dollar yen. That's Tesla. Quick thoughts from David Scott, ex-banker journalist. Yeah, it's a little too low. Not a great microphone on his end. Look at the volatility. Oh, man. Yeah, that's the end right up here. Here, let me get the Epic pen out. All right. And pull out the monitor. Cool. This section right here is what I'm looking at. So that's the volatility of the yen, that little line right here in the corner of the screen. The yen's mysterious move. Oh, man. Yeah. Haha, no mystery. Yeah, Santiago, he's got it. Man, absolutely great. So yeah, every single commentator is essentially saying this is probably BOJ.
Starting to see some pretty wild moves taking place. An element of the market is saying that we are getting closer to that point where the Ministry of Finance will give the blessing to the Bank of Japan to intervene, effectively selling foreign currency and buying back in Japanese yen. We saw dollar yen earlier just trade up to 160. It came back a bit. We've just seen a 150-point rip to the downside.
That's the chart we're looking at.
Yeah, the market is getting a little bit nervous. Implied volatility is pushing up, and I can imagine liquidity is thinning out. And it's also probably being exacerbated a bit by the fact that we do have a national holiday playing through in Japan. Now, if we have a look at some of the conversations we're seeing, an element of the market is positioning long of Japanese yen on the hope that we do see the Ministry of Finance in giving that blessing to the Bank of Japan to intervene. The other half of the market is saying, well, you know, now's not quite the time. And while we might see some big punchy moves to the downside, you know, we still need to see a situation where we're going to go past FOMC on midweek and also non-farm payrolls. So a full intervention may not happen for a week or two, and dollar yen may still be another 200-300 points to the upside. But we are on watch at the moment, and obviously those pronounced moves can cause some big duress. So position sizing in the yen pairs is absolutely paramount at the moment. Now, for me, the problem.
Yeah, that FOMC meeting coming up next week, in the middle of next week, next Wednesday. That's going to add more positive drift to the upside on this, because they're still expected to be hawkish, if not a little more neutral on their expectation. It's going, like, there's so much going on for the dollar right now, including the yield spreads. In fact, I have an indicator right here that tracks the yield spreads, and just look at that daily candle, man. That is a it looks like a Darth Maul lightsaber. Let's go ahead, pull up the yield spreads here. Yeah, across the board, except for today compared to yesterday, and a little bit over the last 7 or so trading days, the yield spreads are effectively flat, a little bit negative. But over the long term, over like the last month, the yield spreads are still incredibly, incredibly positive over every single duration from the 1 year to the 30 year. And I know you can
Japanese yen, and we
see the OBS yellow outlines. Sorry, not much I can do about that right now.
are starting to see some pretty wild moves taking place. An element of the market is saying that we are getting closer to that point where the Ministry of Finance will give the blessing to the Bank of Japan to intervene, effectively selling foreign currency and buying back in Japanese yen. We saw dollar yen earlier just trade up to 160. It came back a bit. We've just seen a 150 point rip to the downside. So, you know, the market is getting a little bit nervous. Implied volatility is pushing up, and I can imagine liquidity is thinning out. And it's also probably being exacerbated a bit by the fact that we do have a national holiday playing through in Japan. Now, if we have a look at some of the conversations we're seeing, an element of the market is positioning long of Japanese yen on the hope that we do see the Ministry of Finance in giving that blessing to the Bank of Japan to intervene. The other half of the market is saying, well, you know, now's not quite the time. And while we might see some big punchy moves to the downside, you know, we still need to see a situation where we're going to go past FOMC on midweek and also non-farm payrolls. So a full intervention may not happen for a week or two, and dollar yen may still be up 200-300 points to the upside.
Yeah,
so we are on
it's
watch
a
at
risk.
the moment, and obviously those pronounced moves can cause some big duress. So position sizing in the yen pairs is absolutely paramount at the moment. Now, for me, the high probability outcome is staying out and actually looking to buy any kind of weakness from an intervention move playing through, similar to what we saw back in September 2022, where we saw the full intervention playing out. Dollar yen ripped 550 points to the downside, but then over the next 20 days or so, we saw a dollar yen going on an 8% rally.
Holy smokes.
And those fundamentals are still there. Nothing really changes from a Ministry of Finance intervention. We can have a look at the Tokyo inflation numbers, which obviously predate or precede what's happening in the national numbers, and we saw them coming out at 1.8% on headline, and the core numbers came out at 1.8%, well below expectations as well. And then Governor Oeda himself came out and said that the impact from a week again hasn't really been felt. Now, we also have a look at inflation expectations in the market with these so-called break-even rates, which look at average or inflation, how it's expected to average over the next 5 years. We've seen them rolling over a little bit despite the weaker yen, and they currently sit at 1.39% from around 154 last week. It's hard to justify much more of a stronger yen other than Ministry of Finance. And again, it sort of gives the idea that any kind of weakness playing through in dollar yen will be a buying opportunity. If we have a look at the differential between US Treasuries and Japanese government bonds, which obviously give you that idea about what's happening in policy divergence, back in January, that premium of US Treasuries stood at 3.1.7%, and it currently sits around 380 at the moment. So again, it gives you the idea that an intervention move will be quick and people will look to buy back into that, and that's coincided with a move that we've been seeing in dollar yen from around 140 up to 160. Now, if we have a look at implied volatility in dollar yen, it does tell us that the market is on tender hooks for big movement playing through. Again, comes into our position sizing. We've got 1 week dollar yen vols trading around 17%. Obviously, that does include the fact that we've got payrolls and FOMC, so that's obviously something that's there. Now, something that I think is sort of poo-pooing against the intervention idea is if we look at the premium of volatility of 1 week puts relative to calls, we can see that puts are trading at a 2 vol premium to calls. So if we were really expecting massive intervention and a 550 point rip to the downside, you know, those vols would be about 4 or 5 vol premium in puts relative to calls. It's not the case at the moment, and maybe that comes because, as I say, the market is looking pretty whippy, but how much of this is what's happening in liquidity because of the national holiday playing through? So, of course, the conundrum we've got at the moment is position sizing. We need to keep an eye firmly on what's happening there. Do we get another 200-300 points to the upside on the idea that now is not the time to do full intervention, or do we bet for a long yen and the idea that it comes very, very soon, in which case we cause a rip? In which case, if it does, then you need to get out pretty quickly because the market could turn very aggressively. So a very tactical situation, but if we have a look at the price action today, it's jumping around and intervention is coming. The market seems to be testing out the Bank of Japan and the Ministry of Finance here.
Yeah, so another intervention, another move like this would probably bring you down to the 152, 151 mark. That would actually be insane. to see, especially during FOMC week, during all these other major US economic events that we got going on that are increasing just on their own. Just before we even got all this information that already were increasing the expected volatility for the week ahead. And now we have this on the inside. It's going to increase volatility in the FX markets pretty much for every single pair that's trading against the yen right now. Let's keep looking here. A lot of people talking about yen. Do you think major central banks ex-Fed are going to credibly draw a line under US dollar strength? Think again. Reserve holdings as proxied by US Treasury custody holdings are below pre-COVID levels. So that's quantitative tightening for you. Japan. Wow. It is far down on that line. Wow. Yeah, everyone's focusing on USD JPY volatility at the moment. Man, vol traders are having a field day at the moment, aren't they? I bet a lot of guys who are trading vol are probably selling quite a bit of it right now. Yeesh. Yeah. Horrible, horrible spike. Get rug pulled. Yeah, if you didn't have a stop or trailing stop on this, I would absolutely imagine the rug pull on this would have just been absolutely insane. The one thing I was telling people who are in my trading group and who I hang around is, you know, my expectation, yeah, is for a higher dollar yen net, but you're essentially playing chicken with the Bank of Japan and Ministry of Finance. Whether or not when they intervene, you don't know. They could do it at any point in time and put the kibosh on this exchange rate. Getting your rug pulled out from under you. Let's see here. Anything else? Oh my god. Footage of the BOJ official crying bonsai. Oh man, no, I'm not gonna play. I might get a copy striked or something, copyright claimed or whatever. Let's see here. Anything else to... Oh. Yeah. I bet a lot of people who've been long yen for several hundred pips over the last week are upset to see a lot of the gains that they had here just gone. Yeah, over the last 3 days specifically. Again, this red line here marks the high that we had, and when we breached the 160 line here, we breached 160.233 on the dollar yen, and that's what this red line is here. Actually, I'll go ahead and add 160.233 up there so you guys can clearly see that's the high. Yeah, someone is getting squashed. The 160 barrier option holder was the first casualty, of course. Whoever owned that is likely furious seeing the price retrace. Question is, how many momentum traders bought in tonight at 158 and are now bleeding? Yeah, how many traders bought around here? Yikes. Yeah, look at all these reactions to the dollar yen move. Just, this is not natural price action. Of course, it's definitely the BOJ MOF coming in, stepping in. Yeah, a lot more activity on Twitter. On X. Yeah, dollar yen extends, declines. If this is BOJ MOF, you can't think of anyone else that can move the market like we have over here on the left. They're doing a pretty shoddy job. Haven't even got to Friday's low. Yeah, they didn't even get to last week's low here. Way down here. Oh man, we should probably highlight that, right? So they didn't even breach this low here, made way back when. And what was the price of that low, real quick? That low was 154.97. Wow. And we'll go ahead and make that text really big so it's easy for you guys to see. And we'll scoot the label there over to the right. So then we can scroll our chart forward. And we'll do the same thing for that one as well. So this was the prior low we had from this dump way over here. And this is the high we made on the day, breaching the 160 level. Let's check out a few more of these responses live as we get this reaction here on dollar yen. We haven't seen direct JPY intervention in Asia since the height of the great financial crisis. Feels like we're witnessing something more than a rate check right now. Well, there's the intervention. The Ministry of Finance sends their regards. Yeah. But it looks like it's failing so far. Off the low, we've bounced close to 200 pips so far. And you know what? If we get into the New York and the London session for this next trading day in FX, and this thing rallies up back above 158, I would not be surprised to see another dump come in. Either another dump comes in from Ministry of Finance, Bank of Japan, if this rally going into London, going into New York, extends into 158, or if the rally in the positive drift does continue, one other potential outcome is Ministry of Finance, Bank of Japan get cold feet, and they say, "Oh, we've obviously, this intervention, we tried it, and it didn't keep the markets down. We're probably gonna have to wait until after FOMC, so probably at the beginning of next week, end of this week." But so far, a 200 pip recovery off the low. Net from here, we're down 250 pips, or about roughly in the middle of this sell-off. Wonder whether the USD weakness we're seeing today is front-running a similar outcome later in the session. I know some people will say that this is BOJ, Ministry of Finance, intervening, and it might be, but don't forget Japan is closed today for Sowa Day, a day to honor the late Emperor Hirohito. I can't say that. Hirohito, right? Did I say that right? Someone will tell me. But yeah, it's kind of odd that this is happening on a holiday, a bank holiday in Japan as well. Maybe that was strategic in order to prevent the Japanese banks from coming in on the same day and helping reverse the move speculatively. Yeah. BOJ suiting up for another wave. Oh man. Yeah, a lot of references to that. Bizarre moves in dollar yen continue. And oops. Japan yen erases loss after touching the 160 mark. Let's see, do we have any new stuff here? Oh, Tesla wins preliminary approval for Chinese officials to roll out full self-driving in China by partnering with Baidu. Wow. So that's quite a win for Tesla. I wonder what the pre-market's going to look like for Tesla tomorrow on this news here. And all I want to do here is copy the link to that. And Gary Black, managing partner, the Future Fund LLC, SEC regulated investment advisor. Well, it looks like the commentary on the yen has slowed down a wee bit here. So let's go ahead and just check if there's anyone else here in like the last 30 minutes or so. Yeah, it's literally all over the place. It went to 160 before massive reversal occurred. Difficult to have any conviction on a trade currently. Yeah, I'd agree. Let's go ahead and check out if there's any heads of research talking about stuff. Let's see here. They're talking about Red Sea stuff. Yeah, not much going on here. Yeah, not much left over there, so let's go ahead and check out Financial Juice. Here's their European session prep. So we're going to be getting London, Europe session here. Yen has fallen well below levels seen as red lines for Japan, prompting traders to wonder when the government would begin purchasing the currency to stabilize it and why they haven't already. Oil prices fell. Okay. China's government bonds have once again avoided a collapse in the global debt market, demonstrating one of their commonly mentioned benefits for investors, a low correlation with their global rivals. U.S. Treasury is slated to maintain its sales of long-term debt unchanged. German HICP and German CPI due here for the European session. Let's see here. Any more news out of the markets here? Yeah, European markets head higher for open. European equity markets were headed higher. For higher open on Monday, extending gains from the previous session as investors shrugged off another hot U.S. inflation report on Friday. While looking ahead to the Federal Reserve's monetary policy decision this week in Europe, investors will address Germany's inflation figures and Eurozone consumer inflation expectations for April. And then we have some earnings, and then Euro stocks futures jumped 0.4% pre-market trade. Let's see here. Meme stock, or one of the world's most traded currencies. Yeah, that's great. Who says FX doesn't get a lot of volatility? It just depends on what you're trading, right? I mean, if we were to look at some of these US dollar pairs that aren't yen based. Come on, load up TradingView. Look at this. Go ahead, hide those drawings real quick. Euro dollar is just doing a whole lot of nothing. Yeah, just a whole lot of nothing. Aussie dollar. Man, so many people must be using TradingView right now. It's really slowing down. Yeah, whole lot of nothing. Let's check out a few more yen pairs, why don't we? Yeah, looks exactly the same as the dollar right now on the euro yen. Oh man, Swissy yen. I wonder what that's gonna look like. From the high to the low, yeah, feel about as much as the US dollar. Okay, there's not too much left to say here. We have to wait until the London session, prints, and we see how people in Europe begin participating in this market, what direction they'll take it, and then what ends up happening during the New York session in response to this drive lower, or if we even get maybe comments out of the BOJ, frankly, on if there was any intervention. Maybe they'll admit to it. Maybe the Ministry of Finance will say something. So with that all said, I'm going to go ahead and end the stream here, and I'll thank you all for watching this stream on such short notice. Hopefully you enjoyed the live commentary and the Twitter feed here on the right as we watched and did a bit of analysis here on the yen. All right, you guys. Thank you for watching.